So the marketplace will be chewing over President Buhari's statement later Tuesday about the directive that he says is giving the Central Bank of Nigeria to stop giving FX to official FX at the official FX rate to those who want to do food import. It's the biggest story that we're all waking up to this Wednesday as we start today's business and markets day. So this is the big story that everyone is poring over this morning as we get back to business. It's the biggest story around the currencies market that President Buhari has made since the new year started, saying he's pursuing this economic diversification of the economy, import substitution, and backward integration. And how will this be implemented moving forward is a conversation we just had. I will continue to have this as the week progresses. Everyone will be weighing in on this. Join the conversation on Twitter. You know how to find us at Channels TV. And, of course, you can tag me into that conversation. We thank you, our viewers, for making your responses to what you've heard already from Bismarck Rwani, the CEO at Financial Derivatives Company. Let's touch base with Temple Ashaju in our studios at the Stock Exchange to bring us up to speed. The market, as you heard earlier when we started the show, was trading water on Friday, 1.17% for the week before the market went on that long Muslim holiday. The banking sector went down the most, more than 6% on that sector reading, 6.05%, a very nasty trading week, as it were. Of course, the global market went into a bit of a disarray last week on the back of the China-U.S. face-off over the Chinese pegging the yuan at about 7.0. That has since changed a little bit. Global markets are coming down a little bit over the weekend until this morning. And since the beginning of the week, we spent Monday and Tuesday in the public holiday. So some folks may be missing the markets, taking time to relax and enjoy the holiday. But we keep an eye permanently here on all markets in here and outside, and we hear a little bit more during the hour on the show. But let's get moving on with the market. Where we stopped was the oil and gas market. The conversation around the oil and gas industry is still out there. What do we need to do with the deregulation? Meantime, this was how the oil stocks that we track for you on a daily basis. This is how they finished off on Friday. 40 oil since lost its 20 naira reading on the counter and was down 8.20%, a big profit taking on Friday. Owando lost 1.35%, still chopping down that stock below the 4 naira psychological level. Eternal Oil lost 5.45%, a bit of a profit booking here. As you can see, Seplat, the big boy within that space, the only EMP was unchanged, less than 100 units, and that's just a blip there on the radar. Global Spec, 1 million shares. Japol sitting down at 20 kobo per share, 6.030 million ordinary shares. Check the, let's just take that away and look at the NES, over-the-counter market, where you have the unlisted securities market. That market also lost 0.64% on Friday, and that's giving you 717.05 reading, and the market cap there. In terms of volume, 2.58 million, 115.8 million in naira value, and 31 transactions. Well, a bit of a descent in terms of trading, but investors also booked profit on that. Let's bring in Temple Ashaju here to finish off this look back into our markets before the holiday, taking us through the fixed income space where Treasury bills and bonds leave. Temple Ashaju from our studios at the Stock Exchange. Temple, good morning. Welcome to the program. Try to touch base with the market before the holidays. Finish off this market round. Then we'll look at some news and some earnings that came in as we were preparing for the long holiday. Red Express PLC, I'm sure you talk about that. I came up with about, say, turnover was up about 20% for its financial year ended March the 31st. Welcome to the show, Temple.
Good morning, Boson. Well, talking about the bonds, the fixed income space, I mean, last week things went really bearish because we saw the announcements that of the developments rather coming out of the U.S.-China relationship in terms of the trade talks that has been hitting deadlocks in recent time. That's continued to impact on markets generally. Here in Nigeria, the fixed income market, we saw a bit of exit of investors given the kind of risk of sentiments that are beginning to develop on that global news that is now rattling the markets generally, and of course creating a negative impact on the global scene generally in terms of global growth, which is now becoming a kind of lackluster generally. So here, if you look at what we had at the Treasury Bill space, things weren't really, really good. We then saw the CBN beginning to intervene again after some 3 weeks paucity in terms of OMO auctions. They resumed last week. 114 billion naira offered across board, across the 85 and 344 day, 364 day, and of course 1 year papers. We saw that rates were actually rising. Stop rates rose for 1 year paper precisely by some 84 basis points. If you look at the secondary side of the market, average yield also rose due to some liquidity squeeze that we have in the system. We got the bond yields also rising at the secondary side of the market. We saw an average of 40 basis points rise week on week to some 13.83%. This tells you that going forward, we'll be seeing increase in terms of the yields of all of these instruments that you have available in the fixed income markets. That's the sense that we got in terms of the debt side of the market here in the Nigerian market. Talking about Red Star company that you mentioned, the earnings came in. Of course, we saw that the figures. This is a logistics company that is also trying to, blitz the trail in the markets here. There are not so much of them listed in the markets. And of course, it is something that will shape the investment decision of investors this week. We'll see how investors will key into the opportunity that is available in Red Star Express this week, even though we know that we have just 3 trading sessions going forwards for the rest of the week. Bosun.
Yes, Temple is going to be a very interesting week. Mr. President just threw the FX and the central bank into the entire mix, and every one of us were rattled yesterday night. And of course, you listened to Mr. Owani there this morning. I'm sure CEOs, not just of by financial analysts and economists, will be worried. I'm sure CEOs of some quoted companies in the food, beverage, and industries will be taking Mr. President seriously and taking it to board and management meetings starting right now as we speak.
As long as that decision doesn't affect the raw materials needed by a lot of this consumer goods company, of course, you know a lot of them are listed here in the market. You've got the likes of Nestle, the likes of Unilever, you've got a host of them, Honeywell, Flour Mill, all of these companies listed here in the market. As long as this decision does not impact on their raw material needs, I think it will be a plus for them eventually. So if eventually it becomes something that the monetary policy has to take and apply, in the system going forward, perhaps when they have the next MPC meeting, then we will see how they will revisit it and then give a breakdown of how it will impact on companies, what is expected, what you can do, how what this particular decision or this policy rather will affect. If it will touch on raw materials, then we'll see how they can go and key into backwards integration. Then the narratives will then begin to change, and we'll then begin to hear from analysts and from these CEOs that you referred to what their thoughts are on this particular issue. Yeah, well, as Mr. Iwane said earlier, I mean, it is more like a desire. It is more like a statement that he just made, and so we'll wait for the implementation. Well, if Mr. President has a desire, he has 4 years in the saddle to make those desires come true. So he's a CEO and he's going to be there for the next 4 years. So you just have to take care of your boss' desire if he has 4 years to be there, because you need to produce. But again, if you look at some of the companies on the market, a few of them perhaps will be having some smiles, as it were. Look at Nestle, for example, that started his own backward integration a few years ago. Some of his products, and this is not advertorial, like Golden Morn, is now sourced 100% within Nigeria. You see sometimes on the packages, you see the picture and statement from farmers across the country who are major suppliers of corn and other products like soy and whatever to Nestle. I'm sure Cadbury is doing a bit of that. Nigerian Breweries and Guinness, of course, also started part of their backward integration since the Obasanjo's administration, when they started sourcing some products locally.
to make sure that this input into beer or other alcoholic drinks when they were hit back then. So I'm sure a few of them had a bit of an early start, and for them this is perhaps a bit of an icing on the cake. But again, if you're going to do backward integration, you need money to invest in the machinery. I'm not too sure if this is about raw materials. I'm sure it's likely about maybe Titus fish and geisha and other things that some of us do eat.
Harping on the need for money to be able to carry out all of these, I mean, the space is now big enough for these investors to actually play in. The space I'm referring to will be the capital market. In recent time, we've seen quite a number of these companies that you mentioned, you know, going to the FMDQ to say floating some CPs, some commercial papers. Nigerian Breweries has done that. A couple of other firms have also done that to be able to midwife some of the need for working capital and all of that. So that is actually still possible. I know that Nigerian Breweries, for example, has actually been talking about the possibility of using cassava to brew their beer. And if that has worked out, that is one thing I really can't confirm at this point, but I know that they have it in the works. So it's something that they will also be able to tap in. If this particular decision of the president is something that will come into play, possibly as the public will be expecting what the monetary policies monetary committee will make of it eventually, then we'll see a lot of rejigging in the system. Bosun, you know this. We'll see a lot of these companies that have had plans like this in the works now trying to implement them, because again, they need to go get the FX at some kind of higher rates, whether at the I&E window or by any other means. You know, it's really going to be higher. So if you also can't get it at the I&E window due to the implementation of the decision, then you know you need to go to the streets. And by the time you're hitting the streets to get the FX at a higher rate, then it will tell on your business. So the expectation at the end of the day is to have them complying by such a decision if it comes into play. And then when that happens, you see them raising capital. A lot of these ones listed in the stock market here will possibly start eyeing some kind of private placement, some rights issue, maybe not an IPO, because that is rare to find right these days in the market. Or better still, they go back to where they can actually get the commercial papers, put this together, and of course that becomes opportunities for investors or shareholders of some of those companies too at the end of the day to also key into, even though we know that CPs are more like high-stake games for a lot of investors. So when this happens, it explains the kind of rejigging I'm talking about. So we'll see how that pans out eventually.
Tempo, thank you so much for breathing some life into this conversation, which is a developing story. It was breaking news overnight, and we're just tracking it as we speak. Thank you so much. Do stay with the market for us, and we'll see you tomorrow on the show.